In the last 24 months, three of the survey tools that small businesses spent a decade adopting have been quietly killed off. Delighted gone as of June 30th, 2026. GetFeedback's Salesforce-native product, retiring December 31st. And Promoter.io wound down so quietly that most of its customers never noticed it die. Three different products, three different owners, the exact same script. This isn't bad luck. It's a structural correction. And if you run a customer experience program, you're standing in the middle of it. Here's the script. A tool gets founded for small and mid-market businesses. It grows, it gets loved. Then it gets acquired by a much larger platform. The press release promises investment. What actually happens is starvation. The roadmap freezes, the integrations stop being maintained, and support goes quiet, with tickets sitting unanswered for weeks. And a few years later, the product is retired, so the parent can point its engineers at the enterprise roadmap. The announcement never uses the word shutdown. It says consolidation, alignment, focusing on AI-powered XM suites. Delighted was acquired by Qualtrics in 2018. GetFeedback went to SurveyMonkey in 2019. Promoter.io went to Medallia the same year for a reported $2.3 million. All three are now dead or dying. And these acquirers aren't amateurs. If this were an execution problem, at least one of them would have gotten it right. And there's a fourth death most people missed. WooTrick was acquired by InMoment in 2021. Then InMoment was acquired by Forsta. Then Forsta was acquired by Qualtrics in May 2026. WooTrick is now 3 acquisitions deep. The login page still loads. Existing customers can still send surveys. But there's no roadmap, no new customers, and nobody inside building a future for it. Call it an ambient death. Delighted and GetFeedback got announced deaths, a date on a calendar you can plan around. An ambient death gives you nothing. The product just stops mattering quietly until some quarterly review decides it's not worth keeping the lights on. If your vendor has been absorbed rather than shut down, the announcement already happened. You just didn't get an email about it. So why does this keep happening to good products with real customers? Because the math of horizontal SMB customer experience breaks at scale. A typical SMB survey tool sells for $20 to $200 a month to customers who churn at 3 to 5% a month. That puts lifetime value somewhere between $1,000 and $4,000. Acquiring that customer costs $300 to $1,200. So the ratio of lifetime value to acquisition cost lands around 2 to 1 in a good year. Now compare enterprise experience management. Deals worth $50,000 to $500,000 a year, multi-year terms, net revenue retention above 110%. That math is 5 to 1 or better. For a founder-owned independent company, 2 to 1 is a perfectly good business. You hire slowly, you stay profitable, you compound. For a public or private equity-owned parent, it's poison. It drags down the blended metrics and eats engineering that could be funding enterprise AI features. The rational decision, every single time, is to sunset the SMB line. This isn't bad faith. It's gravity. And here's the part most people haven't connected. Even the giants couldn't carry the story. In the summer of 2023, within roughly 30 days of each other, both of the largest public survey companies left the stock market. Qualtrics was taken private in a deal led by Silver Lake at $12.5 billion. Momentive, the owner of SurveyMonkey, went to Symphony Technology Group for $1.5 billion. Medallia had already gone private in 2021 when Thoma Bravo paid $6.4 billion for it. That deal just delivered the category's harshest verdict. In June 2026, rather than put in fresh capital, Thoma Bravo handed Medallia to its creditors. Around $5.1 billion of equity wiped out. When private equity takes over, the playbook is mechanical. Cut costs, focus on the highest margin segments, prune everything else. For the SMB products inside those companies, that playbook is an existential threat. The sunsets weren't surprises, they were the announcements catching up with the ownership. So what's left? Lane. 1. Enterprise experience management at the top. 6- and 7-figure deals, sold to global brands. It survives, but it's consolidating fast. Lane 2. Vertical CX in the middle. Healthcare, hospitality, automotive. Tools built for one industry, with the integrations and benchmarks to prove it. This is the lane that's actually growing. Lane 3. Independent SMB specialists at the bottom. Founder-controlled, profitable, deliberately not chasing venture-scale growth. None of them will IPO, and none of them are trying to. That's the feature, not the bug. Now, notice the lane that isn't on the list. Horizontal SMB products owned by enterprise parents. Delighted, GetFeedback, Wootrick, and Promoter.io all lived it. None of the survivors do. At this point, a reasonable person asks, can I just build this with AI now? Honest answer? Sometimes yes. If you send fewer than 1,000 surveys a month to a friendly customer base, a form, a webhook, and a dashboard is a weekend project. Modern AI coding tools make it genuinely easy. But that's the visible 10%. What you can't build in a weekend: email deliverability, which is a multi-year sender reputation game. Multi-channel delivery across email, SMS, in-app, and mobile, each with its own anti-abuse rules. Privacy compliance is a continuous engineering tax. And industry benchmarks, which only exist at multi-tenant scale. You can't fake that by querying your own database. Send 10,000 emails from a fresh domain, and most land in spam, and nobody tells you why your response rate is 1%. If you're at scale or in a regulated industry, building costs more in engineering time than buying costs in cash. So if you're choosing a CX tool you actually want to keep, ask 3 questions before you look at a single feature. 1. Who owns the company? A founder-controlled independent has fundamentally different incentives than a subsidiary 3 levels deep in a private equity portfolio. 2. When did the product last ship a real feature? Not a UI refresh. 6 months of silence is a yellow flag. 2 years is an ambient death happening in front of you. 3. Is this product the company's headline or a slice of a suite? Headlines get investment, slices get maintenance budgets. The category isn't dying, the companies that don't fit it are. Retently sits in lane 3 by design: founder-controlled, profitable, independent, and not for sale. If you're migrating off a sunsetting tool, the links below walk through how to choose the next one well. Thanks for watching.